So back to the next chapter, the value of supply. So calculation of values. In the previous sessions, already we discussed what is the time of supply and composition scheme, etc. Then coming to section 15 of the CGST Act 2017, nothing but what value of supply. So what is meant by the value of supply? So value of supply of goods or services of both shall be treated as the transaction value. Treated as what? Transaction value. So what is meant by the transaction value? The transaction value is nothing but the price actually paid or payable for the supply of goods or services or both, where the supplier and the recipient are unrelated and the price is a sole consideration. So the price actually paid or payable for the said supply of goods or services or both. So what is the transaction value? Transaction value is nothing but the price actually paid or payable for receipt of supply of goods or services or both. If so, supplier and recipient are unrelated to each other and the price is a sole consideration. If the supplier and the receiver are related to each other, then this price is then section 15 is not applied. And if the price is not a sole consideration, for example, so we provide the services to Mr. A, in return he paid 50,000 in cash and one car. 50,000 in cash and one car, and some part of the consideration received in money and the remaining part received in what? Car. So that is not said to be a sole consideration. In that case, section 15 is not applied. Section 15 is not applied. So the price actually paid or payable. So means the total amount paid previously and the total amount paid at present and the total amount to be paid in future all are included as a part of what? Transaction value. All are included as a part of what? Transaction value. And another one is the transaction value may be paid either by recipient or third party on behalf of recipient to the supplier, and that amount paid to the supplier or on behalf of the supplier to the third party, or on behalf of the supplier to the third party. So here, if the value of supply of goods or services or both, it includes what? So section 15.1. Section 15.1. So, value of supply is equal to, so section 15.1 plus section 15.2 minus section 15.3. So section 15.1 is relating to what? Transaction value. Section 15.2 is relating to what? Inclusions in the value of supply. Section 15.3 is relating to what? Exclusions from the value of supply. So if section 15 is not applied, means if the supplier and recipient are related to each other and the price is not a sole consideration, section 15 is not applied, then how to calculate the value of supply? Some separate rules are there. Determination value of some CGST value of determination rules are there, then those are applied. Then consideration may be either a monetary consideration or non-monetary consideration. So then coming to the section 15.2. So section 15.2 is relating to what? Inclusions in the value of supply. So first of all, taxes other than GST are included. Taxes other than GST are included. For example, coming to the tobacco product. Tobacco product is the one product which is liable for both excise duty as well as GST. So for example, tobacco manufactured in India. So then the price is equal to 10,000. The excise duty is levied at 10%. So 1,000. Then so 11,000. This is treated as value of supply for the GST purpose. So taxes other than GST stands for taxes which are not subsumed under GST. Taxes which are not subsumed under GST are included in value of supply. Are included in value of supply. Then coming to the payment to the third parties. Payment to the third parties I will explain. Then incidental expenses incurred if any, and any amount charged by the supplier in respect to of supply either at the time or after or before delivery of the good. Interest or late fee or penalty are charged for delay in payment, and subsidies directly linked to the supply other than those provided by central government or state government. So coming to the subsidy provided by, first of all, whether subsidy is directly linked to supply, not linked to supply. So if it is not linked to supply, not included in value of supply, whether it is provided by government or third party. If the subsidy is directly linked to the supply, then who will provide? Provided by government or provided by third party or other than government. If it is provided by government, if it is provided by government, so that is not included, excluded. If it is provided by third party, that is included. That is included. For example, Classmates is a company, so it entering into the AP government to supply the books to the government students. Government students. Actually, the total price of the book is the price of the book is 60 rupee, but AP government agreed to pay 40 rupees and the 20 rupee collected from the student. 20 rupee collected from the student. So here the transaction value is equal to 20. Nothing but price actually charged, actually paid or payable by the student. So 20. So but the question is whether subsidy is added or not added. If the subsidy here, the subsidy is linked to the supply, right? If the subsidy which is linked to the supply provided by any person other than government is included, but here the provided by what? Government, so not included. So value of supply is 20. For example, if the subsidy provided by third party, if any charitable institute so provide the respected amount, then that amount is included. The value of supply is treated as 60. Value of supply is treated as 60. So subsidy is directly linked to the supply other than those provided by central government or state government, those are included. Then, so taxes other than GST, nothing but taxes which are not subsumed under the purview of GST are included. Next, payment to the third party. Payment to the third party. An amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and not included in the price actually paid or payable for the goods or services. Goods and or services. The best example is, for example, coming to the chartered accountant. So he conducted he entered into the, so here they enter into an engagement letter. As per that engagement letter, the total remuneration of the chartered accountant is specified. That is said to be a transaction value. But during the conducting of an audit, they incur some traveling expenses of the chartered accountant and as well as for his article students, and he incurs some food expenses and incur for boarding and lodging expenses. So those are all first meet by the CA and then later those are reimbursed by the client. So these amounts are actually required to pay by the supplier, but which are incurred by recipient later paid by supplier. Those are included in the value of supply. Next, incidental expenses like commission, packing charged by the supplier to the recipient of the supplier, including any amount charged for anything done by the supplier in respect of supply of goods or services at the time of or before delivery of the good, or as the case may be, included in supply of services. That incidental expenses are included. Next, interest or late fee. Interest or late fee. For example, Mr. A sell the product to the Mr. B on credit basis, so for rupee 10 lakh, and B agreed to make the payment within 30 days, but he pay the amount within 45 days. Then for that excess period 15 days, Mr. A has a right to collect what interest if it is stated in the agreement. Then that interest or late fee or penalty charged for delay in the payment is included in the value of supply. For example, if the interest or late fee waived off by the supplier, actually he has an option to collect the respected interest from the Mr. B, but it waived off. It waived off by the supplier. Then waive off of the interest or late fee, those are not included in the value of supply. Those are not included in value of supply. Next, subsidy. Subsidy already we discussed. So not linked to the supply, always not included. Linked to the supply only if it is provided by other than government is included. If it is provided by government, not included. Next, exclusions of the discount from the value of supply. So section 15.3. In case of section 15.3, two elements are there. One is a discount and another one is what? Subsidy, which was linked to the supply and provided by the government are excluded. So the value of supply shall not include any discount. The value of supply shall not include any discount. So that is, so for example, if the discount is available at the time of supply, discount provided at the time of supply is excluded, or before supply is also excluded, and after supply is excluded subjected to the conditions. First, the term of discount available on the date of supply. Term of discount is available on the date of supply. Term of discount is available on the date of supply. And input tax credit to the extent of discount should be reversed to the government if it was already claimed. Input tax credit to the extent of discount should be reversed to the government if it was already claimed. And another one is the discount shall be specifically linked with the relevant invoices. So such a discount is established in terms of an increment on the date of entering into the contract. A discount shall be linked to the relevant invoices. Input tax credit has been reversed by the recipient of supply relating to the discount given. So, if input tax credit reversed means what? Actually, Mr. A supplied the goods to Mr. B, around 10 lakh worth of the goods are provided. On the date of entering into the contract, so we have an agreement. If the party pay the amount within 30 days, we will provide 20% discount. But so while supplying the product, Mr. B claimed the input tax credit completely on 10 lakh and he made the payment on 25th day. Means the party eligible for claiming the discount. Then so he paid after reduction of 20% 2 lakh, he paid only 8 lakh. So Mr. B is eligible to claim the ITC to the extent of 8 lakh only. Sorry, on the value of supply of 8 lakh, but he claimed the input tax credit on the whole supply, including the amount of discount. If that ITC was already claimed, that's why he has to reverse. If the ITC not claimed, that input tax credit to the extent of discount is not required to reverse. Okay. So if the discount is provided either before or at the time of supply is excluded, discount is provided after the value of after the time of after supply of the goods or services is also excluded if it satisfies these three conditions. If it is available on the date of entering into the contract, and if it is relating to the respected supply, and the input tax credit to the extent of discount is reversed by the recipient if it was already claimed. So this is relating to section 15.3. So value of supply is nothing but so transaction value as per section 15.1 plus inclusions as per section 15.2 minus exclusions as per section 15.3. Then, so for example, suggested discount, buy more, save more, buy more, save more, buy more, save more. So nothing but what, if you purchase the more quantity, for example, if you go to the big bazaar, so we have some announcement like if you purchase more than 10,000, then you will get discount of 10%. If you purchase more than 20,000, you will get a discount of something. If you purchase more than 30,000, so why these discounts are provided? To increase the purchase volume, to increase the quantity, to increase the purchase volume. So the discount is excluded. The discount is excluded. And periodic or year ending or volume discount. Periodic or year ending or volume discount. So these allowed by supplier to the stockist. Such a discount are also excluded. So generally these are available to the wholesaler. These are available to the wholesaler. The distributor provide the respective discounts to the wholesaler. Those are also excluded. And secondary discounts are there. This is not shown. These are not shown at the time of supply. The discount which was available at the time of supply, at the time of supply, is eligible for reduction. But if any discount is provided after the time of supply, after the time of supply, then such a discount cannot be excluded from the value of supply. Cannot be excluded from the value of supply. These are generally called as cash discount. So these discounts are provided for immediate recovery of the cash only. That and the term of discount is not available on the date of entering into the contract. That is not relating to the supply. That is relating to the recovery of the cash. Next, outward freight and transit insurance, where the supplier agrees to deliver the product at customer premises and arrange the transportation and insurance, the contract of supply become composite. These freight and insurance are included in what? Value of supply. Next, value of supply made by component manufacturer. Value of supply made by component manufacturer. So value of supply made by component manufacturer with mounts dies owned by original equipment manufacturer sent it free of cost to him. This value of mounts and dies does not added to the value. The contract between OEM and component manufacturer was for supply of mounts, dies or belongings to the component supplier, but the same has been supplied by OEM to the component manufacturer on free of cost basis. The amortized cost of mounts and dies will be added to the value of supply. Okay. So this is relating to the value of supply, section 15 of the CGST Act 2017.